Good evening. Today is October 6th, 2019. My name is Oluwale Okabola, Spartacus Trading Corporation, here to bring you the prep report, a review of last Friday's trade, last Friday being the 4th, a review of the 4th, quick review of the 4th, and a prep report for tomorrow being the 7th, October 7th. So let's jump right into it from Friday. I put out a live video talking about a trade that I took that I was interested in. Um, of course, now the market has a great habit of making me look silly, but there was reasons why I decided to bail out of the trade, which is okay. Let's just quickly talk about yesterday, but Friday. But you can refer to that live video, and it talked about just the things you need to look at, be aware of, to continually be a successful trader. How you maintain a level of mental flexibility as you're in a trade. Um, so anyway, Friday we opened. We had a high confidence open. I talked about in the live video how if the market gets back within the overnight low, you could get some liquidation. Here's the overnight low. The market did get back within in C period, but as you see, no acceptance. Value clearly higher for today. No assault or attempt to fill the gap. The market rallied. I believe what happened, and you could tell by the structure on the sell off from B period, new shorts got into the market. They were unable to get below the overnight low. You can refer to the live video as far as the um, what these competitors would be thinking if they're short, how important to get below the overnight, I'm saying overnight low, I apologize, the overnight high, how important it is to get back within the overnight high. And if they can't, one or two things are going to happen. If you get below the overnight high, you get more liquidation. If you can't get below the overnight high, you're going to get a short cover and rally. So in this case, the bulls won. They pushed the market higher. You can tell by the structure of the profile. Midday, the market balanced and then broke out again. This shows that probably got some more shorts into the market who's looking to sell this market off. They couldn't get what they wanted. They ended up covering, took the market higher. So in a nutshell, that's pretty much what happened on Friday. Market went up on light volume, and we'll talk about that later in the review. So let's jump right into the bar charts. This begins the prep report for tomorrow, October 7th, pit session trade. We're currently in a this is the monthly chart. We're currently one time framing lower, 1 month. We're also we have a 2 month balance area. We breached September's low last week. However, we closed back within September. So what we have is a new 2 month balance area. Within that 2 month, we have a 3 month, 1, 2, 3, 3 month balance area. So we have balance within balance, but the monthly bar chart is trying to trend lower. But in the grand scheme of things, you can tell from here, it's an upward trend. So the monthly is trying to not trend lower but time frame lower in the midst of an upward trend overall over the last couple of months. So you want to keep that in the back of your head. It's very important to keep concepts on top of concepts, so you understand clearly what's going on with the time frame longer than the day time frame. Another thing I want you to pay attention to, if you haven't noticed, um, if this market, we're trading above all the halfbacks, the 2 month halfback and 3 month halfback. Halfback is what I use as a gauge to see where are we trading in a balanced area. Halfback is just a halfway mark. You want to know where are you in that journey to the high or the low. Are you above or below halfway? So we're above the 3 month, 1, 2, 3, 3 month halfback. I'll show you now in the profile. Here's a where are you? Here's a 3 month halfback right here. So we're trading above the 3 month halfback. We're also trading above the 2 month halfback. Here's a 2 month halfback right here, this second green line. So bring a little color to my comments. So we're trading above both halfbacks. Also, what you want to pay attention to, this is the monthly bar. A time frame higher than the day time frame, a time frame higher than the monthly time frame, weekly time frame. I apologize. Here's what's going on. You want to monitor this month because if we begin to continue to trade higher and we take out October's open, what are we leaving behind? We're leaving behind, if you can visualize, a serious excess low. Again, this is a time frame longer than the day time frame. We take out October's high. There's nothing but excess being left behind. So October's high is a reference you want to pay attention to, which I have marked on my chart. October's high. What am I saying? That's correct. October's high. We want to pay attention to October's high. October's open. I'm sorry. Here I go again, right? We want to pay attention to October's open. Very important. Not October's high. I apologize, folks. October's open, because if we get back to October's open, we leave a excess low on a monthly chart. And if we begin to trade above October's open, nothing but excess, that can push this month higher. So the potential of an excess low is important for a time frame higher than the day time frame. You want to have that marked on your chart, because more than likely, if we look to breach this is probably depending on what's going on in the day time frame as we get to this reference, probably a go with trade, because you understand and you know, you've done the prep work, well, I'm showing you rather, that we breach that, we're leaving an excess low. And that could be very strong because we're talking about a time frame higher than the day time frame. So keep that in mind. That can possibly bring in some more buying to the upside. Very important on the monthly. That's why I'm spending the time to talk about this reference. I apologize for confusing you. It is October's open at 29.87. Go to the weekly. We are now in a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And I'm going to look forward to Monday starting tomorrow. So I'm going to say we're in an 11-week balance area. Within that 11-week balance area, we have a 2-week, going to be 3-week, this week. And when we open today, tomorrow, that puts us in a 3-week, unless we trade above last week's high, that puts us in a 3-week balance area. So I'm looking ahead. We're in a 3-week balance area, a 3-week, 1, 2, 3. And then when tomorrow opens, a 3-week within a 2-week within a 3-week. So we got a 2-week, 3-week, 11-week. What does that mean? Balance, balance, balance. That's all that means. Keep in mind, I talked about this former balance area that we broke out of weeks ago, how we came back and test. We got that liquidation that I talked about in several reports back since I guess since the beginning of September or mid-September. You check out those reports. I talked about the importance of this balance area and returning into it, meaning a breakout failure. Potential destination is the balance area low. Doesn't mean we have to get there, but it's a potential destination. Market got back within, liquidated these folks. We're talking about a time frame longer than a day time frame. You can say it's news related. It doesn't matter. The same principles apply. We had a breakout from a balance area, a weekly, longer than a day time frame, and then now when the market tests, whether it's news, doesn't matter, you brought in a liquidation. Why did the market liquidate so much? Because you had a time frame longer than a day time frame who is looking to push this market higher, and their stops are going to be back within this balance area. You get back in, you elect the stops. That's why a lot of these sell-offs were on light volume. No new sellers, just old money liquidating, if you think about it. Okay, so now we tested the balance area. We could not get to the destination, and now the market since has closed above. It's the same theory. Folks who shorted into this balance area, a time frame longer than the day time frame, they shorted into this balance area. Where are they going to put their stops? Outside of the balance area. The market could not get any more to the downside. The market begins to cover. You know that because you can see from the profiles. This stretched out profiles, there's a short covering. These elongated, stretched out profiles, those are liquid. That's liquidation. So you understand what's going on and how it all works out in the bar chart and within the weekly bar charts. Nevertheless, we closed out of this balance area. Something you wanted to pay attention to because I talked about it. If there's going to be change to the downside momentum on a time frame higher than the day time frame, I can't stress that enough. If there's going to be any change, we're going to get back out of here and close above. So we're paying attention to this reference once again. We want to see, can the market, here's this reference, the re-entry of a multi-week balance area at I think it's 45, 29.45. We closed above it. We want to see, can the market now stay above that former balance area. Can we stay above this former balance area? If we can and the market begins to trade higher, you know that we have change. We've had the liquidation. We've had the liquidation. Now we have change. You got stocks back underneath here. It's the same game over and over again. So that's what we want to pay attention to in a time frame higher than the day time frame. Remember, these are the folks that got money to move the market, and they're not playing the typical day time frame games. On the daily bar chart, we're just one time framing up one day. This is an elongated day, 35 points on very light volume. I think 2.9 billion shares traded on the New York Stock Exchange. 2.9 billion, call it 3 billion for a 35 point range is very light. So what am I saying? Well, let's go to the profiles. Well, before I go there, we have this elongated day and I'll talk about that. Keep this one in mind. All right. All right. What we got coming into tomorrow's trade, we got a couple of concepts that we want to be pay attention to, have on the front of our mind. One is the spike rules. We have this spike base here. The market made another distribution higher just late in the day, so we're going to call it a spike. So coming into tomorrow, we're playing the spike rules. If we open above this spike base, that means that prices did not trade high enough to be cut off. You could expect more to the upside, but you want to see where value, not price. You want to make sure value is developing above this spike base. If you get that, then you want to see you already will have higher value. So then you will want to see one time framing, basically elongating value to get you back up into this range, which we'll talk about. Spike rules. If the market opens below the spike base and value begins to build below the spike base, you should have some liquidation to adjust this inventory. Remember, I talked about this is a 35 point range, 2.9 billion on the volume. That's very light. So there, and you can see there really isn't any elevator stop. There would be nothing to stop this market from trading lower to adjust this long daytime inventory. So you want to be aware with that. And if you get any liquidation, then you want to pay attention to overall value. Where is overall value developing? Because even though we get liquidation and we got overall value unchanged or overlapping to higher, at some point, if you cannot get a double distribution to negate value, at some point, one time framing should end because one time frame is the only thing that's going to suspend higher overlapping a higher value. One time framing stops, then you probably could get a rotation back up to adjust the short inventory. I hope that makes sense. So you want to pay attention to what's going on in either direction. Okay, if you're in a short, you don't want to fall in love with your short unless you get a double distribution showing a new auction to the downside. On the flip side, if your bias is long, you want to see value develop above this spike base. You want to see value begin to elongate higher. At a minimum, you want to see value overlap Friday's high and continue to extend higher. That puts you in this range, which is extremely light volume. I think it's a 60 point range, and the volume. I'm sorry, I don't have the exact number, but I'm sure you guys can find that number out. The volume from the first, it's very light. If your bias is to the upside, the first thing you want to make sure you see is that we fill this double distribution. You feel that double distribution, that puts more pressure on these folks who have not got out in their shorts. because we're talking about a time frame. Who would be covering a time frame longer than the day time frame, right? The monthly, that would be the best. They're covering. There's a time frame longer than the day time frame. They will be covering, or you'll have new shorts that really is shorted against a light volume because there's nothing to stop this market from rotating higher. You can see the volume. Look how light the volume is. You know you're on a great trade if the market can get above C periods high from the first because you have nothing but single prints. And look at that light volume. If you catch a trade, if the market decides to trade higher this week, you catch a trade and you can get above this reference, you want to do your best to hold on to this trade, but you want this trade to show you that we are in light volume and it's going to behave like it's in light volume, meaning that we're going to just shoot on up. Maybe you get a couple of pullbacks, but you get a pullback and more buying, pullback and more buying. That's what you want to see. But this action is probably for the later in the week. However, it could happen depending on what kind of bid the market can catch. So these are some levels you want to pay attention to going to the upside. To the downside, once again, you need value to be developed below the spike base. Then you want value to begin to elongate. If you got anything really to the downside, if you got anything really to the downside, you'll see value begin to be overlapping to lower at a minimum. Now I bring in the references because I want you guys to see how this all plays out. Remember, we have possible change because we're trading above those half backs. You see those half back levels I got. So refer to the beginning of the video is why I'm paying attention to those half backs. We bring in a double distribution from yesterday. So if we close the spike base and your bias is short, the next level is you want to see us close that double distribution. We can close that. The next thing you want to monitor for is we begin to trade below these half backs. Remember about this multi-week balance area that I showed you on the bar chart? That is this reference right here. If we begin to trade below this reference, which is at 45, you should already begin to imagine or visualize what's going on in a time frame higher than the day time frame so you can position yourself on the right trade. If value cannot develop below this and price breaches here, it could set up an opportunity for you to go long, breaching it back to the upside because you clearly understand and you can visualize what's going on with a time frame higher than the day time frame. We test lower in the day time frame, being tomorrow, nothing happening. We come out. That's confirmation that there's no more desire to get back into this former balance area. I hope this makes sense. This is a long video, but I want to make sure you guys are on the right side of the trade this week and you understand what's going on with the other time frames because we're in an area where all the time frames decide to meet. Looking forward, if you really got something good for a nice swing trade with options, I would recommend, but you could try it outright. Just hold on for dear life. Is again, we begin to trade above September's open. Trading above September's open leaves that excess potential excess low. That will be a nice excess low going to the upside. So it would be an easy trade to monitor because if you begin to get acceptance back below September's open, the trade idea is off the table. You need to go ahead and exit. The risk versus reward potentially is greater. The reward is greater than the risk if you know how to play it and you use the right instruments. This is a record long video, so I'm going to stop here. I hope this information is more than enough to get you grounded for the week and help bring some profits in. All right, this is Olawale Okabolo at Spartacus Trading Corporation. If anyone has any questions, feel free to reach out to me. I will respond to you. Have a great day, everybody.